Imagine waking up tomorrow and discovering that you are now the owner of one of the biggest banks in your country. Not a small local bank. One of the biggest. Millions of people have accounts with you. Thousands of employees work for you. Businesses depend on you. Families trust you with their life savings. And somewhere beneath your headquarters, there's a massive vault filled with billions of dollars. Now be honest. What's the first thing you'd do? Would you walk into the vault and say, "Well, I'm the owner. All this money is mine now"? Most people would think that. But here's the truth. If you owned a bank today, you couldn't legally spend even $1 from that vault for yourself. Sounds impossible? Then let me ask you another question. If the money inside the bank isn't yours, what exactly do you own? The answer is about to change the way you see money, banks, and even wealth itself. Most people think a bank is just a giant building where money is stored. You deposit it, the bank locks it away, and hands it back when you need it. Not even close. A bank isn't a place that stores money. It's a business that moves money. That's the difference. Money sitting in a vault earns nothing. It's just paper. The moment your deposit enters the system, it becomes part of something bigger, someone's first house, a new factory, a small business, a hospital, a school. Every day, money quietly moves from one person to help another person build something. That's how economies grow. That's how banks make money, not by owning cash, but by managing its movement. Now imagine you're the new owner, sitting in your office. Your CFO places a report on your desk, asterisk, today's deposits, $480 million. Asterisk. Sounds amazing, almost $500 million entered your bank today. But that money isn't yours. It's your customers' money. If tomorrow everyone asks for it back, you're legally required to return it. So where does the profit actually come from? Banks don't sell phones, cars, or houses. They sell something almost invisible, time. One person has money today but doesn't need it right now. Another person needs money today but will earn it over the next 20 years. The bank connects them. The saver earns a little interest. The borrower pays a little more. The difference is the bank's profit. Simple on its own. But multiply it by millions of people, every single day, and tiny profits become billions of dollars. This is why banks don't get rich overnight. They get rich through repetition. Nobody deposits money because the building looks nice. People choose a bank because they believe their money will still be there tomorrow. The entire industry runs on one invisible asset, not cash, not gold, not buildings. Trust. History has already shown us what happens when that trust disappears. In March 2023, Silicon Valley Bank, one of the largest banks serving American tech startups, collapsed in under 48 hours. It wasn't reckless lending that killed it first. It was panic. Word spread on social media and group chats that the bank was in trouble, and within a single day, customers tried to pull out $42 billion. No bank on earth keeps that much cash sitting idle. The bank was shut down by regulators before the weekend was even over. That's a bank run in the modern age, no crowds outside a branch, just thousands of phones tapping, withdraw, at the same time. Even a healthy bank can collapse if everyone demands their money at once. Because banks never keep every dollar in the vault. If they did, they couldn't make loans, and if they couldn't make loans, they couldn't earn profit. And if they couldn't earn profit, there'd be no reason for a bank to exist. So as the owner, your biggest fear isn't losing money overnight. It's losing people's confidence. Because trust can disappear in hours and take years to rebuild. It sounds clever. You're the owner, who's going to stop you? Almost everyone. Large loans are reviewed. Major transactions are monitored. Independent auditors inspect the books. Government regulators watch constantly. Even your own board of directors can question or reject your decisions. Owning a bank doesn't free you from the rules. Ironically, it means you follow more rules than almost anyone else. Because one bad decision doesn't just hurt you. It can hurt millions of families saving for retirement, students paying tuition, and businesses paying salaries. Successful bank owners don't think like gamblers. They think like risk managers. Every loan is a question, will this person repay it? Every investment is a question, is the reward worth the risk? The public sees banks as money-making machines. Inside, they're really decision-making machines, thousands of decisions a day. Some worth hundreds of dollars, some worth hundreds of millions. And banking isn't just home loans. It's business loans, credit cards, international transfers, merchant payments, foreign exchange, wealth management, and millions of small transaction fees, each one tiny, but multiplied by millions of customers every single day. So if banking is this profitable, why doesn't everyone just open one? Because starting a bank is easy. Keeping people confident enough to trust it with their life savings is something else entirely. This is where most people misunderstand what it means to be wealthy. The smartest bank owners don't sit around thinking about the cash in the vault. They ask one question every day. How can this bank create more value tomorrow than it did today? Because the richest institutions in the world don't become powerful by holding the most cash. They become powerful by controlling the flow of money. Every morning, millions of salaries land in accounts, businesses pay each other, families buy homes, and credit cards get swiped thousands of times a second. Behind almost every one of those moments, a bank is quietly making the system work. A bank isn't selling money. It's selling trust, security, convenience, and time, and those are worth more than cash itself. The value of a bank depends entirely on whether people keep trusting it. The day they stop, the business shrinks. The day they believe in it, the business grows. That's why the greatest bank owners spend their time thinking about people, not piles of money. How do we make banking safer? How do we cut fraud? How do we earn trust for the next 50 years? So if you owned a bank tomorrow, you wouldn't become rich because billions of dollars sat in your vault. You'd become rich only if you protected that trust, managed risk wisely, and kept the system moving every single day. Owning a bank was never about unlimited money. It's about carrying unlimited responsibility. And maybe that's the real lesson behind every successful billionaire. They don't own piles of cash. They own systems. Assets. Ideas. Things that keep creating value long after they're asleep. Money is just the reward. The real wealth is ownership. The next time you walk past a bank, don't just see glass walls and an ATM. See one of the most powerful machines ever built, one that doesn't run on cash. It runs on trust. And if this video changed the way you look at banks, hit subscribe, drop a comment below. If you owned a bank, what's the first decision you'd make?